Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly DIA analysis for the week of Monday, January 3rd, 2022. Happy New Year, by the way. This is the DIA analysis, that is the Dow Jones Industrial Average ETF. This is broad brushstroke analysis, week-by-week analysis. I'll get to that in a moment. Before I jump into the charts, just want to please click like if you like the weekly DIA analysis. Clicking like does help us a great deal, actually, with the search engine results we get on YouTube. If someone searches DIA or Dow Jones Industrial Average, so forth and so on, our chances of showing up early in that search effort are much greater if our likes are of a sufficient number. And also click subscribe. Subscribe to our Wicked Stocks YouTube channel. You'll be notified each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the weekly DIA as well as the weekly IWM, that is the Russell 2000 ETF, and upcoming the next week or two, the weekly Bitcoin. And for months, we've been doing the daily SPY report, the daily Triple Q report that, of course, goes out daily. We'll also offer a free stock pick every week. So subscribing will provide you notification when all that information has been uploaded, and seeing it sooner than later is more relevant and more effective for your trading decisions. So let's jump into the charts. These are all weekly bar charts, by the way. And once again, this is broad brushstroke, basic. I don't put a lot of numbers at you. I'll just give you the kind of the big picture. And what I'm seeing here is, despite the fact that the Dow, the DIA, put out a new all-time high last week, it is merely approaching a meaningful zone of resistance this week between 368.74 and 369.18. The more meaningful of those two is the longer-term horizontal one, but I like 369.18 for capturing, say, slippage through 68.74. This is a zone of resistance that can contain January highs, possibly into later Q1, but I want to say for right now, January highs. And from here, we can fall back to channel support at 344.39 over the next few weeks, over the next month and a half. It's kind of tough, of course. On the way down this week, we do have 352.77, which is nothing more than the high of the move low from about 5 weeks ago. And also, just so you know, on the way down from last week's high against that low from about 5 weeks ago, the 50% downside retracement is very close to that 352.77. I think it's around 353.30. So that area can contain weekly selling pressures. And if we close below 352.77, then we should next week test the 344.39 channel bottom, which, as you can see, has performed nicely. Well, at least it did back in December. Was that December? Yeah, that may have been late November. I don't have the chart exactly in front of me right now, but late November, early December low, that spike low that was contained by that channel bottom at 344.39, it still can perform the same function. In other words, because we're in still a long-term bull market by many measures, I weight 344.39 heavier than I do the 368.74. So I told you 368.74 can contain buying through January. But the very similar formation below at 344.39, the channel bottom over the same time frame, I say can contain quarterly selling pressures. And from there, we can turn back up to new highs within a matter of a month or two. If we did, by the way, close below 344.39, we have another 1 to 3 weeks, I would say, before testing 326.83, which is a longer-term support area that could contain at least quarterly, possibly annual selling pressures. And I'll also remind you of the fact, and it's almost irrelevant right now, that below 326.83, we have an ultra-long-term support level at 316.08. And that is a long-term channel top we settled above about a year ago, then eliciting a long-term buy signal that is still in play, that should continue to play out into later 2022. I don't expect to see 316.08, but the chances are heightened if we settle this week, for instance, below the 344.39 channel bottom. Let's talk upside, that if we do close this week above 369.18, and I think you should provide, at least a 1% violation, so, 3.7 plus 369.18, so forth and so on. I'll let you do the math. If we close at 370 even, is that a buy signal? Yes. And if you act on that, do you have an argument from me? No. I'm just being more cautious in that there is always the chance of the sort of head fake, if you will, where we close at 370 at the end of this week, and then we gap, back below the 368.74 formation the following Monday, and then we sell off from there. So, for reliability's sake, technically, I like to use the 1% violation threshold. So you just add 1% to 369.18, and if we close at that number or higher, we have a valid buy signal that should play out through Q1 and even into later 2022. The next target above 368.74, and this could be within 1 month, it could take a couple of months, would be the 395.67 full channel extension. I like using these as targeting mechanisms, and so it becomes an objective. Whether you would sell aggressively into that is a whole nother case to be made, and I wouldn't necessarily recommend it. I do think that if we close above 368.74 at the end of this week by that 1% margin, then I think later in the year, we could actually rally all the way into that 423.39 rising channel top. And that's not altogether different than what we saw post-COVID low in terms of the market's ability to sustain that kind of a rally. But we're a long way from that. There will be hurdles on the way up that I'm not even showing, different intermediate channel formations and so forth and so on, that I'll be apprising you of if we do close above 368.74. But once again, this is broad brushstroke. So I'm just letting you know that if we do close above the upper 360s, let's put it, then I think that 423.39 channel top is attainable by the end of 2022 or sooner, and can contain annual buying pressures if or when tested. I think that kind of sums it up. Once again, I'll just reiterate that holding below the 368.74 to 369.18 area does allow for overbought conditions to play out, to emerge of a toppy market, and we could, over the next month and a half, fall all the way back into the mid 340s. I'll leave it at that. I appreciate you watching. Please click like if you like the weekly DIA, and subscribe to the Wicked Stocks YouTube channel. You won't regret it. I'll be back next week for another weekly edition of the weekly DIA report. You have a great week, and we'll talk soon.